What's going on, guys? I just finished my math final today. Two more finals, 2 more days. We got tomorrow, the day after, and then we're in summer. Um, Actually, tomorrow and Thursday are gonna be live, like trading videos. So they're gonna be longer, but they're gonna be like live, cause my finals are at like 12:30. So, um, yeah. Um, yeah. I didn't take a trade today, but I'm gonna show you guys the setup that I missed during because of my final. Um, let's okay. We're in we're in replay mode right now. Okay, so what do we see on the higher time frame? 4 hour. Okay, we had this massive push up the day before and the day before that. I'm still looking to come back into this new week opening gap, just because that's a very high probability retrace. Um, but yeah, so I can go either way. Today can go either way. We look at the 1 hour. Okay. We look at the 1 hour. We're respecting well, that's not gap, or that's equilibrium. We're respecting bullish order flow. Okay. Same on NQ. Yep. Respecting bullish order flow. Okay. Now, lower time frame. Okay, market just opened. 9:30 candle on ES. Boom, ripped through London high. NQ, London low. Ooh, what is this? What's happening? We have a SMT. We have a bearish SMT and a bullish SMT. But because we haven't retraced into that new week opening gap yet, I'm I'm more weighted towards the bearish SMT. And also just because we have um like low time frame fair value gaps and just PD arrays. I learned that word. That's a pretty cool word, PD array. It's like it's like fair value gaps, equilibrium, like those confluences. It's pretty cool. Um, because we have that, it's just I don't know. Still nothing happened yet. Could go either way. Okay, then what happens? We inverse. Okay, so what's step one? We need a change in trend after the after the manipulation. Okay, so ES takes out London high. So now we're primarily looking for shorts on NQ. So what? We get this inverse fair value gap. Okay, boom. Now what do we're looking for a 5 minute retrace. Technically we do get okay, wait, let me go back. Technically we do get the retrace here, but it's just still really early in it's what? It's 9:39. That is like really that's too early for me to enter. Um like if you would like actually enter like just like robotically, then you could enter there, stops there, but I'm not sure what ends up happening. I think you just get stopped out, right? Yeah. Um, but that's just too early for me, and there's still more volatility that could like come out of these like upcoming candles just because it's so early into market open. So we wait and we look for a better retrace. So we go, keep going, boom. Okay. Keep going, pushing up. All right, we go down. We come up. And then okay. So what is this? This could be us respecting the low time frame manipulation or the high time frame manipulation, the bullish SMT. Because what is this? This is a retrace. This is a what? Wait, I forget where I go from. What is this? We just no, that's the wrong thing. What is this? This is a 79% extension. to a bullish, like to the upside. So boom, and we're seeing bullish signs out of it. But if we were to look for entries on the for bullish entries, we would have been looking at ES, and right now ES is looking choppy AF, and nothing's really happening. But we could also look at it right now as equilibrium getting hit to go more bearish. Price plays out. Okay, equilibrium gets hit. Now what are we looking for? We are looking for an inverse fair value gap. So what do we get? We get an inverse fair value gap right there. Then we enter here, stops above the previous high, and then we target draws on liquidity. So what could we target? We could target Asia low, London low, or we can target this low. We can target beginning of this imbalance, go to lower time frame, and we can target this low, and yeah, we can also just target all the way down here. That's pretty crazy though. I don't think that's gonna happen. So let's see how this plays out. Realistically, I would have just probably just put it here. I wouldn't have put it all the way down there just because. Okay, let's see how this plays out. Boom. And does it even end up taking that out? Imagine if it does. Okay, no, we're okay now. Alright. But yeah, that's the trade that I missed out on today. And I got out of the test at 10:40. So right around here. Right around this 5-minute retracement. And I just want to talk about my psychology a little bit for today, just because I missed this move, and it could have been like the account passing trade. Excuse me. But I didn't want to enter off of FOMO, just because I saw this one video, or this one reel on Instagram that said you missing I forgot what it like. Okay, I'm just gonna like brief broadly go over what he was talking about. Basically, it's like you can lose much more. Or okay, if you don't enter off FOMO, there's nothing that you can lose. But if you do, you can lose all the progress, not only money wise, but also psychology wise, all the progress that you've like made previously, because entering off of FOMO and losing that trade can, like, because it happened to me before, can mess with your psychology like a lot. And yeah, if I did enter off this like tiny retracement, even though there's not really confluence, I don't think we reached equilibrium yet either. Yeah, we didn't even reach equilibrium, so it wouldn't even have been a good entry. It would have just been a random FOMO entry, which is not good. So I'm really happy with, I'm a little bit pissed that I missed the trade, but it's inevitable, stuff comes up. Yeah, I'm happy that I caught a trade yesterday during a final. Tomorrow, Thursday, and Friday, I'm gonna trade at my setup live. Like I'm gonna record it and post it, but like it's gonna be, yeah, it's not gonna be like a recap. It's gonna be like me actually entering. And yeah, that's really it for today. Tomorrow is gonna be a different video. It's gonna be longer. It's gonna be you seeing my thought process, me speaking it out loud, and stuff like that. I don't think we have news tomorrow. I'm gonna check right now actually. And yeah, that was today. No loss, which is good. Always good. There's no loss. How I think about it all the time is like every time I don't trade one day, even like if I miss a move, or if there's just no confluences and I don't enter, but my bias is like correct, I just say like, okay, today I didn't lose money, right? It wasn't today wasn't a losing day, and I preserved my capital, so I'm able to trade tomorrow. What if like I did enter and then I got stopped out and then just kept revenge trading and then blew the account or something like that? So it's not the end of the world that I missed this move. So yeah, that's really it. And see you guys in the next video.